9 a.m. in Beijing, 10 a.m. in Tokyo. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to markets and the open here, Hong Kong, Shanghai, and Shenzhen. Let's get to your top stories today. Stocks across the Asia-Pacific rising. That's after 2 days in the reds as dip buyers pile in. The dollar treasuries under pressure slightly as strong U.S. data prompts traders to pare back rate cut bets.
China's Xpeng embraces embodied AI, previewing new products such as flying cars, humanoid robots, and driverless taxis. We'll speak exclusively with the company president, Brian Gu, in just a few minutes.
And I'm Annabelle Drawlers down here at the Hong Kong Stock Exchange. We'll have more on Robotaxis. It is a big day for listings led by rivals Pony.ai and WeRide. We're going to be hearing from the heads of both of those companies shortly after their shares begin trading.
And I'm Stephen Engel in Shanghai at the China International Import Expo, also known as CIIE. We'll be speaking later in the show with Lululemon's China MD about its mainland business and how it plans to stretch, sorry about the pun, its winning strategy here amid slowing consumer demand.
All right, we start with some breaking news here this morning when it comes to Nissan. So they have decided to sell its headquarters to Minth Group. This is a $584 million deal. So that global headquarters in Yokohama is now going to be now sold to Minth Group here. The purchase will be led by a special purchase company that's been managed by the likes of KJR Management. That's a Japanese real estate unit of KKR. And they plan to announce that sale later on Thursday as part of this whole broad cost-cutting campaign. You've seen the stock up some 3% here this morning. We'll leave that there for now. Let's do a quick look at the market action. This whole sort of stocks rebound is certainly underway here in Asia. You take a look at how Taiwan is faring as they open up. We're up 0.7%. Japan's already up more than 1%. We're back well above that 50,000 level after that wobble yesterday, right? All those sort of Wall Street CEOs talking about a 10 to 20% correction. It seems like that was just a one-day event. And right now we are seeing plenty of dip buying here today in Korea as well after that meltdown that we saw. We are, relatively speaking, not seeing punchy gains, but we're still recovering in Seoul here this morning. U.S. futures, though, keep in mind, are still lower by about 0.1%. What drove this? Obviously, there was that Supreme Court story about, they're questioning Trump's tariffs here, and possibly they could take some limits on that far-reaching campaign for President Trump. So that could be a sign of relief against these markets as well. You also had some strong data out of the U.S. to talk about. But there you go. We're tracking, of course, where currencies are. There's a bit of weakness, but really the tail this week has been the dollar strengthening. And we'll watch very closely, right? Dollar yen, we're still around those 153, 154 levels, for example, as well. And you take a look at how other asset classes are doing, right? So given that it is a bit more risk on, gold has recovered a little bit. We're coming off that just about right now. Bitcoin also now around $103,000. Keep in mind, when you're watching the long end of the yield curve in the U.S., the U.S. 10-year yield is now the highest since September. When you take a look at that ISM data that came out from the U.S. overnight, that was a very strong print, right? When you're talking about services ISM surging as prices hit a 3-year high. So the resilience of the U.S. economy is probably something that's really what traders are debating about, and whether the Fed can actually cut in December. You take a look at how it looks like when it comes to China, right? So obviously we've been talking about Robotaxis is a theme of the game here today. You talk about Xpeng, you talk about WeRide, you talk about when it comes to Pony.ai. Futures are pointing positive. Looks like we'll continue the good vibes here today for Greater China. 712 for the currency here. But overnight, keep in mind, Nasdaq Little Dragon did this, was slightly higher. But when you're watching some of these key listings that are happening here today in Hong Kong, Dave, WeRide and Pony.ai also fell substantially. Xpeng was also down close to 4%.
Yeah, very close peer group. Same listing date.
Yeah.
Interesting plot line there. Yeah.
Coincidence? I don't know.
Well, we'll find out what they feel about each other. We'll see. I think they're sharing the stage later with that GOM. Anyway,
yeah.
It's going to be very interesting, certainly to see. And of course, we'll be joined by the bosses of those three companies over the next few minutes or so. Let's very briefly, let's touch on the dollar. Certainly something to talk about as it sort of influences the price action today. And Yvonne was talking about ISM actually came in services at the highest end of forecast. So the dollar for the first time in about a year, so it's testing the 200-day for the very first time there. since about a year or so. So could see a bullish break. We'll see what happens and whether or not this repricing around the Fed continues. Point number one. Point number two related to this is following Jay Powell's briefing and him pulling back expectations around the Fed cut in December. So we've gone from over 100% price there. We're now nearly at coin toss probabilities, looking at whether it's swaps or Fed fund futures. This is about based on a few minutes ago, but yes, so December is pretty much could go either way, Yvonne. So we'll see what happens with this repricing around the stronger dollar. And to your point, higher yields.
Yep, joining us now, let's talk a little more about this, is Johanna, Chua, head of emerging market economics at Citigroup Global Markets. So it seems like it's down to a coin toss of what the Fed's going to do.
Yeah, no, absolutely. I think people were spooked by the ADP, the private ADP data that came out overnight. I mean, it really all comes down to the labor market. And right now, because we don't have any information, the Fed could be, we could be reopening after the government shutdown, and the Fed will be faced with 3 NFP reports to digest. And I think that's where the big concern and debate going on now. Is the market, how weak is the labor market? Because the reality is that what was motivating the Fed to ease was the labor market. And we, at Citi, as a view, our house view is that there is still softness in the labor market, notwithstanding some of the data that's looking quite resilient. And they're going to respond to that based on their dual mandate. Because after all, the median FOMC members do see policy rate right now as modestly restrictive, which means they still have room to go to neutral.
Well, what does it mean for the dollar at this repricing we've seen this week? Stronger?
Well, I mean, obviously we've seen the dollar already kind of rebound. Yeah. I mean, as market have to kind of reassess that U.S. economy is very resilient. I mean, we've got the Atlanta GDP now kind of forecasting like 4% growth, which is amazing in third quarter in the U.S., which is above potential. I mean, we're not as bullish. So yeah, look, I think but our view is that eventually we still see some mixed signs. We do think economic momentum is slowing down in 4Q. Yes, we still have inflation, core PCE kind of still above target, but we are still thinking that the kind of services component of inflation is still relatively manageable. So we think the Fed will still cut. But I agree, this is very debated now because of this lack of data on the labor market. And I think people were also taken aback. There was a Dallas Fed study that was released back in early October saying that the 30,000 payroll is kind of the break-even NFP. Yeah. Like, you don't really need very strong payroll given what's happened to labor supply. So people are still trying to figure out what type of NFP will move the needle for the Fed to act. And that's why I think people are getting a bit nervous. But, I mean, again, I would say, we are a little bit more on the more dovish and consensus. We are calling for a December, January, and March cut. But again, the key thing really is the labor market.
The fact that we're in a truce for a year between U.S. and China, I mean, does that at least keep the export side of things still strong for the global economy here? Because trade has been really resilient all year round.
Well, actually, the fact that we had this U.S.-China truce and you had the tariff reduction from, the fentanyl tariff by 10%, the calculation is that actually drives down the effective tariff rate in the U.S. by about 1.4 percentage points. So if you're worried about the Fed being deterred to ease because of the inflationary impact, at the margin, that kind of dissipates a little bit. Yes, I mean, exports, I think from the China's perspective, I just came back from Beijing. I think there's a certain level of, greater confidence that, this year we had kind of a net export, significant contribution from net exports. And if you kick the can down the road another year, they could try to squeeze a little bit more of that. But again, there's kind of a limit to that because, our expectation is, growth, especially in the U.S., will slow down in the fourth quarter next year. And, I think despite this kind of little bit of tariff competitiveness at the margin, it's not clear how much China, being the second largest economy, can rely on net exports in perpetuity. So we do think they're going to have to deliver more on consumption support. But I agree. I think they feel a little bit more confident that maybe we can chug this along a little bit longer, and that obviously helps a little bit global risk appetite.
Do we need to rethink growth forecasts for China because of this surprising comeback and future sort of push?
Well, I mean, to be fair, we actually have a above consensus growth forecast on China. So next year we still have about 4.6% growth forecast. Okay. Look, we will see. I mean, we need to see first what the reforms and the policy stimulus that is coming out going into next year. And when you look at the signals from the fourth plenum communique, it's kind of mixed, right? I mean, in the communique, they still focus a lot on modern industrial system and technology self-reliance, and then expanding domestic market is still kind of number 3. Yeah. You got a little bit of more positive signals in terms of significant boost to consumption, but in the end, we really need to see more decisive policy support. And, parts of the economy in China is still struggling, like real estate, right? So there's obviously some offsets there.
Yeah, I mean, I think for China, effective tariff rates are now at 40-some% after this truce. I mean, do you think that still keeps China quite competitive? Versus
I think in certain high-end kind of industrial goods, they're still super competitive because of the scale. Again, it's really hard to compete. In fact, to the extent that there's a tariff reduction on China, it does raise the question of China's relative competitiveness with ASEAN and, for example, India. But again, we're also expecting there will be, now that Trump is in a deal-making mode, we do expect a deal will also happen in India. And maybe, we need to wait probably. We have Bihar elections this week, so maybe we need to get ahead of after the Bihar election, because obviously a lot of the deal making between U.S. and India will have to have something to do with agricultural products, which obviously is a sensitive issue for Bihar. So that's something we need to watch. But yes, at the margin, the tariff differential kind of moved a little bit in China's favor. I don't think necessarily it means the demand for diversification is not going to continue, because it's just an interim pause for now. I mean, we've seen with Trump, it can revise again and again. Of course, we have this worry about this AIPA, but even if we'll see what happens with AIPA in Supreme Court, but, he still has powers on Section 301, which he has already used against China, and he can keep using it. So this is something that I think will create still an incentive for companies to diversify.
We're going into next year. Is it just me, or is the data in most places improving? Is the global economy doing much better than...
Absolutely. I mean, it's been phenomenal. I mean, global growth, we just had Indonesia GDP growth came out also recently. Overall, global growth and Asia growth actually ended up much stronger than expected. And it's really been surprising, right? You would have thought with tariff, that should have a lot more volatility, really impacting more exports. And then there was a lot of debate, is it just front-loading? We should have payback. We did see a little bit of payback, but the payback was weaker than expected. And then the tech cycle ended up being a lot stronger, especially memory chip cycle. So we actually just upgraded Korea growth forecast, for example, partly because this chip cycle has been so strong. So the problem is we were so fixated on tariff, there were other secular trends happening at the same time. And then some of these tariffs, again, the headline looked much worse than the actual effective tariff rate because there was a lot of carve-outs. And maybe we underestimated how resilient and adaptable private sector has been to adjust to that. Now, I don't want to be too complacent because I do think there is still some belated pass-through that's happening. It just takes a little bit of time. And we are still expecting a slowdown to materialize 4Q, 1Q. But I admit that it has been better than expected. And another reason why perhaps it's been better than expected, aside from the agility of the private sector and the tariff, etc., is, look, emerging markets is more than half of global GDP. And emerging markets as a whole, has actually been a lot more resilient. And there's been an improvement in the quality of policy making in EM that's really created a lot of resilience.
What does it mean for scope to support? So the Bank of Korea, for example, do you see an easing there? The rest of the region? I guess you guys have a conference in China next week. What are your expectations for there?
Right.
Less room for easing because things are going better?
Well, I think there's still some room for easing, but of course we have to admit that we're now in a more mature phase of the easing cycle because we've already delivered a lot of cuts. So, for example, we already said RBA, Reserve Bank of Australia, is done. We think 3.6 is the terminal rate. Again, because of the latest data cycle of growth looking a little bit better, like in Korea, I think the rate cut that we were expecting, we've pushed it back a year. So now we basically don't have any rate cut until maybe November of 2026.
Well, they're pretty much done then.
So it's essentially in this cycle it kind of pauses, right? And even in China, again, given the equity market is holding up, there's enough liquidity, the urgency really to ease or cut policy rates has been less, right? Now, having said that, there's still some opportunities elsewhere. We still see opportunities, for example, in Philippines, Indonesia. We still see opportunities, of course. Again, depending on the FX cycle. So there's a few, and Thailand. So you do have a little bit of pockets. But again, I think it's not really, we're kind of past, we're going through, the tail end. And disinflation has kind of bottomed. So inflation is already kind of moving, at least marginally, on the upward bias.
Have a great week ahead and enjoy the conference, of course, at Citi next week in China. Johanna, Chua, their head of emerging market economics at Citigroup Global Markets. Right, just ahead, we talked about, it's a big car day here. Well, still cars or flying cars?
Flying.
Flying, right?
We're heading to the skies.
Xpeng,
and driverless cars, too.
Oh, I'm scared. You get on first. I'll watch you.
A big lineup of guests here coming up. Very many China voices here. Pony.ai, WeRide, Xpeng, Lululemon's China MD also.
They don't make cars, though.
No, but lots of good leggings. The company more to come. This is Bloomberg.
Welcome back. You're watching The China Show. Chinese EV maker Xpeng has showcased robotaxis, a humanoid robot, flying cars. This event, it's billed as its AI Day. To tell us more, Xpeng Vice Chair and President Brian Gu joins us exclusively from Guangzhou. So, a lot of fancy stuff, Brian. Thanks for coming on the show. What does this mean for the business? What are you doing exactly?
Well, yesterday we had really unveiled our latest development in AI technology, and also, really seeing the potential of that technology translating to the human physical world. We actually unveiled our second generation BLA model, which includes our self-developed semiconductor, as well as utilizing that to really advance the autonomous driving technologies on current existing fleet of vehicles. And then take another step further is the announcement of our Robotaxi plan. We're launching level 4 capable vehicles next year with 3 models planned that can tackle both the Robotaxi world as well as self-ownership of level 4 vehicles. And our humanoid robot, we actually revealed our second generation iron. So there's a lot of new technologies really connected through this development of AI as well as our physical AI approach.
And what I think is remarkable, Brian, is that you're doing it all in-house, right? Your own chips, your own software, your own hardware. It's a full stack. In terms of how this is going to support your earnings moving forward, I mean, when, if any, or when do you have any timeline on when this could all be profitable, these new businesses?
Well, first of all, I would say all these areas that we are now really launching into the commercialization stage, most of them actually will have volume production of products by next year, actually represents opportunities as big, if not bigger, than the current EV opportunity. So there are multiple growth drivers that's clearly to be, start to be defined. And also, I think that there's the sharing of the core technology. They all share the same AI core, which we developed the new BLA model, the self-developed the semiconductor, as well as the system of advanced manufacturing, as well as powertrain technologies and the ready-built network of selling these products, enable us to do this much more efficiently than a lot of other companies. So I think, given the opportunity as well as the synergy of these investments, give us a tremendous opportunity for the next 3 to 5 years.
Yeah, Brian, I wanted to actually ask you, because these are actually quite astounding milestones that you're doing. As Yvonne is pointing out, you're bringing, or you've developed, let me rephrase it, developed a lot of the technology in-house, semis, for example. And can you tell us a little bit more, was that difficult for you to do? I want to get a sense of whether or not some of your peers can actually look at what you did and replicate that, and that then becomes something to consider as far as a competitive challenge is concerned.
Well, first, I would say it's not easy, to be really, developing a brand new business in the semiconductor area, which is highly competitive as well, is something that really we poured a lot of efforts, capital, as well as human capital into it. That took us many years, I would say, more than 4 years of development to get to a production stage. But I also would like to say that this is something you must do if you really want to focus on to become a full stack leader in the new mobility technology. You cannot rely on, all, sort of partners to provide core components of your AI, core components of your tech products going forward. That's why we think it's something I would expect that, companies with ambition, with really the expectation to be a leader in this segment for future mobility, will all go into self-developing semiconductors. We'll just become one of the forefront players.
When it comes to robotaxis, what kind of targets in terms of your fleet? What sort of volumes are you expecting here, Brian? And when it comes to cities in China, how many can you actually roll this sort of technology out now?
Well, for our Robotaxi, I think we're doing differently compared to some of the other level 4 companies. First of all, we actually are launching multiple products and capable of being the Robotaxi, as well as selling to private owners who actually want to see advanced driving technologies if they choose to drive themselves. So there's actually multiple use scenarios capable of by our products. Secondly, is that actually we're choosing a very much a partnership approach. For example, yesterday we announced a partnership with Alibaba's AMAP division, where we actually going to collaborate with with the operator of fleets, operator of mobility network to launch such services. So these are things that we're actually planning at the moment. We have not detailed our exact city rollout as well as volume rollout plans, but given our unique strengths, which is the fully software and hardware stack, the ability to make economically attractive products in scale, as well as having an open and partnership approach, I think we actually can have a much faster, sort of scale-up process versus some of the, software or collaboration-only players.
Yeah, on scale, it seems like a lot of these products are focused more on the Chinese market so far, Brian. I'm wondering when it comes to going international and your expansion efforts there, how quickly are you even thinking about going global at this point?
Well, I think, for a technology company, ultimately you have to focus on the global market in order to really scale as well, to amortize your investment. At the moment, I think our initial rollout will be focused on Chinese market. The testing will happen, maybe first with Guangzhou and expand to other cities. But the partnership with AMAP is actually a global partnership. They also have a vision to expand outside of China, so we'll work with them on that. And also, we have announced that we're also open to partner with other operators, likely international partners, hopefully see that similar collaboration model to work internationally. So I think it's a gradual process. Probably China will be the first step.
Brian, it's great to have you. Thank you so much. Brian Gu there, Xpeng Vice Chairman and President, joining us there, of course, on the company's AI Day as well. We're taking a look when it comes to Xpeng shares, along with Pony.ai, WeRide. There you go, Pony.ai, as we count down to these multiple listings that are happening at the Hong Kong Exchange here this morning. You're seeing the gongs right there. 10% losses at the get-go, Dave.
Yeah, maybe let's gusto when they hit that goal. We'll see, of course. It's the first day of trade. We'll see, of course, whether or not the underwriters come in and maybe provide a little bit of smoothing as far as these declines are concerned. It's not been a good week for first days of trade. It's been a good week, though, for listings so far, the dynamic between the two. So, yep, the opening pre-markets are coming up next. This is the China Show. Good morning.
All right, we're taking a look at when it comes to these big listings that are happening here today. Pony.ai, there you go. We're down 11% in the pre-market. And, of course, there seems to be a lot of maybe timing issues, maybe because its rival, WeRide, is also listing on the same exact day today. 8% losses for WeRide, too.
It's kind of like two people showing up to a blind date. Well, two dates for the one. But, yes, okay, there we go.
Vigo and Vita is looking pretty good, though.
Yeah. Why don't we focus on that? Anyway, the opening bell is coming up next. Another busy day out at the exchange here in Hong Kong. At this rate, I think we should just rent some permanent space here because we're there almost on a too frequent basis.
Bonnie Chen will let us.
Yeah, there's enough space. You were there, right?
Oh, yeah. It's a great time. How many gongs are there up there? I think at least 6 I counted here as well. But obviously, we've been talking about WeRide. We've been talking about Pony.ai. Animal Jewelers is live there at the Hong Kong Exchange. Belle, how's it going?
Yeah, I mean, you can see here behind me on the stage, there's 4 gongs up there. 2 of those companies are the Robotaxi competitors. There's WeRide, Pony.ai. What's been interesting to watch is their pre-market trading activity because both of them have dropped so far in the session. I heard you mention those timing issues. That certainly could be playing into it. There are concerns maybe this is the right moment. I hope you hear the clash of the dings. It is very, very, very noisy down here today, as we said. Both of these companies just starting to trade here. And as we said, both of their US listings have really lost some significant ground since they started trading on the NASDAQ last year. So the big question is why they're listing now and as well why they're listing on the same day.
Well,
Yeah.
That's the big question.
And then coming at a time when people are questioning, of course, these lofty valuations of some of these tech companies, perhaps, the timing, as you say, could be the reason why we're seeing such significant losses there at the get-go. So certainly we'll see and continue to track this one here. Belle, she is live for us at the Hong Kong Exchange. But yes, a very good day for Hong Kong Exchange. They just came out with earnings yesterday, too. And they looked really good. But yeah, taking a look at the rest of the markets here so far, we are seeing a bit of a rebound underway here in China. Obviously, what we saw overnight in the U.S. was stronger data, people buying on the dip when it comes to the tech plays once again. So certainly risk sentiment is back on the table. So there you go. CSI 300 is up about 0.4%. And we're watching very closely what happens with some of the tech shares, right? So you are seeing CATL, Capricorn is up to 3% here this morning. The news from the Supreme Court about how they're questioning the amount of emergency powers that President Trump used on these tariffs certainly was something that helped lift sentiment overall as well on the back of resilient data coming through. ISM services was, I believe, a 3-year high. So that was in itself enough to kind of lift up some of the tech sort of stocks there. You take a look at how Hong Kong is doing. This is what we're focusing on here, of course, beyond just these listings, right? So you take a look at what HS Tech, that seems to be on a bit there today. Alibaba's up close to 2%. Baidu is heading the opposite direction, although we are going to focus a little bit more on the Xpengs of the world, right? Just given this AI sort of day, it was very like a Tesla sort of unveiling, right? When you're talking about robotaxis, humanoid robots, flying cars, for example. This is more than just an EV company now. They're talking about really deploying AI into smart machines. So it's quite remarkable. According to Brian Gu, they're talking more about maybe even just international expansion sometime in the future as well. Maybe not so much the U.S. markets, but right now they're focusing on unveiling, of course, at least robo-taxis in Guangzhou and maybe to other cities moving forward there as well. Let's flip the boards and see what else we're tracking for you this morning. So we've been talking about a few of these earnings to tell you about. So Galaxy Entertainment is certainly one third-quarter revenue. There was a slight, pretty much in line, but we're talking about up 0.6%. In terms of when it comes to the big listings, all right, let's see how they are doing after that gong ceremony. And there you go. Double-digit losses from the likes of Pony.ai and WeRide. We saw this already in the ADRs leading up to this listing here today. Potentially it is a timing issue. I think one analyst said it. I don't know if it's 6 months too early or 1 year too late when it comes to this listing. But certainly the fight for investors was very much in display leading up to that IPO as well. We're also watching the likes of Vegan Vita. This is also the other listing that we're talking about. 172% gains there. So the biosciences, the biotech plays are still very strong here. Ningbo Joyson, though, is also heading the opposite direction. So some of these tech plays actually surprisingly aren't doing too well here today, Dave.
Yeah, so I'm now curious whether, and I think that we could get an indication from the underwriters whether or not they are in the market to maybe take some of that red off the screens. So it's the first, what time is it now? 4 minutes. So we'll see what volumes look like and at what level. Anyway, okay, yeah, it's a good day to be a biosciences listing here in Hong Kong. Not so much to be in cars, but it's the first day. It's the first day of trade. Earnings, we talked about Galaxy, as Yvonne is pointing out. Xpeng is a big one. HKX, which is almost fittingly a really good intersection of all these major themes, also reported earnings yesterday. Talked about IPOs as well, as far as the key driver for earnings. The other big story, equally important, I think, but there's just so much news out there on the China front. Some of the biggest changes in addition of Chinese presence to the MSCI benchmarks, right? So they've added 27 Chinese names. Can we go back to that, please? 20 deletions. There we go. And some of the big names are some of the key themes that investors have been buying into this year. Zijin Gold, you have a chips player there, Hua Hong Semi, which, by the way, also comes out with earnings. Ubitech Robotics, and also Ganfeng Lit, among the many, many other names that are being added there into the thing. Okay, let's have a look at any market reaction. And so far, oh, yes, there we go. Very clear market reaction, a positive one when you look at the additions. And the deletions, get that up, please, if we can. Some of the big names that have been removed. Off the 24 are coming up on your screens. And there we go. Quite largely expected move there, given the changes, which take effect, of course, in November. So keep an eye on that. 0.8% is the overall benchmark here today.
All right, let's talk about one of the 4 listings here today. Pony.ai says it plans to use the proceeds from its Hong Kong listing to further improve its services and extend its reach both at home and overseas. The CEO, James Peng, spoke to us ahead of today's trading debut.
Being listed in Hong Kong has always been in our plan book. And because it's our home base, and a lot of the Asian Pacific-based investors actually want us to be in Hong Kong. And I think for our marketing, for our branding, and for our reach to the investors, it's a good stock market to be in.
Are you bothered at all that this listing is happening on the same day as your competitor WeRide? How did this happen?
No, I think it's just our process. It's about the same speed. So I'm actually super happy that both autonomous driving companies will be listed on the same day. It's actually a great thing that shows the market is recognizing that this is a business that's going to be actually has super growth down the road, and that's be recognized by the market. So I think overall, it's a great thing to be celebrating this great moment on the same day.
I wonder how much of this is also being pushed by the scrutiny in Washington, because there has been lawmakers calling the SEC to delist some Chinese companies, including specifically Pony.ai. So do you foresee Pony.ai at some point delisting from the NASDAQ?
No, I don't think that the risk of being delisted is high. Actually, we were planning for Hong Kong delisting before the news that there's some discussion about delisting Chinese-based companies. So it's never our plan to do so, but if it happens, we at least have alternative, and certainly this move to Hong Kong market also de-risks the potential delisting.
So tell me about your fundraising plans. How are you planning to deploy the funds? How much is it going to R&D and how much to fleet expansion? Oh,
actually, this Hong Kong IPO, it was actually quite successful that we even originally anticipated, because I think partly because our business is growing strong, partly because the investors recognizing our success. Majority, about half of the funds mostly will be deployed for the growth and deployment of our Robotaxi fleet. Half of the fund is for that purpose. Majority of the rest probably will continue for R&D, because I think the safety and the advancements of our technology has always been and will continue to be our competitive moat.
There has been some high-profile accidents lately, right, from Xiaomi and other companies. And as you said, while the Chinese government has been very fast in approving regulations, other global governments have been pretty wary of this technology. So how are you prepared to deal with regulatory pushbacks from global governments around safety concerns of autonomous driving?
I think the best way is to prove ourselves. So because we have all the safety track record in the cities that we operated in, and from our design itself, we actually have redundancy put in. We have 360 degree of sensoring coverage with actually at any single point, we make sure there's at least two sensors looking at it. And so from a safety design and the safety requirements point of view, we have all the design considerations and implementations, and also the safety track record. So essentially, we'll present to the government, for any government that will plan to enter, we'll show that we have all the design principles and we have good track record.
What's your message to investors who are concerned that you still haven't reached profitability at this point? Why should they be betting on your company?
We are already at the inflection point, because the thing that for the last 9 years, we were mainly focusing on R&D, and we have made our product to be safe, to be economical, to be enjoyable by the users, and even more importantly, because we have a huge cost reduction on our Gen 7 vehicles, we will be able to reach per vehicle basis gross profit. That means every car we launch to the market, we can make money on it. And then the rest, to have the company-wide profitability, then the problem just remains to be we launch more cars, continue to increase the gross margin, then we should have at least in short, I think at least we have a clear path to the profitability for the whole company.
So when do you think is that point when you can reach positive net income?
By our rough estimation, it's about 50,000 vehicles. When we reach that level, then the whole company will be.
Realistically, what's the timeline for that?
Yeah, we think it can be like 28, 29 timeframe, but essentially towards the end of this decade.
James Feng there, Pony.ai CEO with our China correspondent Min Lo. And coming up, we're speaking to the next one there, the CEO of WeRide as the firm lists in Hong Kong. That interview coming up next. This is Bloomberg.
I would consider WeRide as a great company. They actually push the boundaries of the technology with many other companies, our peers, and it's a respectable company. So I mean, I don't think it's we are as you one of the previous questions alluded to, it's a saturated market.
All right, it's a big listing day in Hong Kong. I'll look at the 4 trading debuts in Hong Kong today. So the comments you just heard were from Pony.ai, from one. Let's jump to the second one on your screens, and let's bring in our tech correspondent, Annabelle, of course, who's standing by at the exchange with a conversation with the other one. Belle.
That's right, yeah, it's been a really big day for listings here in Hong Kong. So 4 different companies marking their listings here today. 2 of those in the Robotaxi space, as you said, Pony.ai, WeRide is the other, and we've got Tony Han joining us this morning. So thanks very much for making the time. We can see, of course, the shares are a bit under pressure so far in early trading, but what was the rationale for listing now?
Okay, so for WeRide, we are a very technology-driven company, and we require lots of funds to build up sales network and to invest in AI and machine learning. And we want to build up Robotaxi, and this dual primary listing in Hong Kong Exchange give us access to both U.S. capital market and East Asia and Asia capital market. This is a milestone in the development of WeRide, and with this kind of fund raised and with this development, we are very sure that will help us to extend our global business.
We can get to how you're planning to use those funds in a moment, but I do want to ask first whether you think there's been any sort of timing issue here. Of course, we have seen your US listed shares dropping because these ones here are priced at a bit of a discount, but generally we've seen WeRide as well slipping quite significantly since it started trading on the NASDAQ. So do you see any concerns around the timing side?
No, not at all. The timing side is just a natural consequence because after US listing, we start the process of a Hong Kong listing. Because of this kind of procedure, normally it takes more than 1 year. And, I think WeRide has done a fantastic job in preparing all the documents and talking to the investors. So within 1 year, think about it. We were listed in NASDAQ October 24th last year. Within 1 year, achieve this kind of dual primary listing. I think it's a fantastic transcript, a fantastic score.
Okay, I mean, I'm sure you're busy and you're probably looking forward to a holiday at some point, but you mentioned the funds that you're raising, and it's more than 300 million for this listing. How are you planning to use them?
Yeah, exactly. Thank you for the question. So there are many 4 categories we are going to apply the funding. Number 1, always try recruiting. We want to recruit top talented engineers from all over the world working on Robotaxi and to realize their dream. Second, we want to invest in the data center and GPUs for data training. Third one, we want to build Robotaxi fleet because WeRide has a global business. We have driving permit from 7 countries. We have 30 cities over 11 countries for testing. So we are building a big Robotaxi fleet. The first one, we are building our sales network because with the maturing of the technology, I think sales and operation are becoming more and more important.
Yeah, you really get that sense of, especially from the Chinese robotaxi players, you, Apollo, also at Pony as well, that it's really that sort of aggressive global expansion push that you're pursuing ahead of any sort of questions around profitability. But what does it mean for the profitability question, given you've got such a big outlay on things like that expansion effort?
You know, the profitability, I would say, is a very natural outcome. And think about the advance of the technology. Maybe like 10 years ago, nobody will I would say, 20 years ago, people will have very skeptical about profitability of all the e-business, but now nobody question about it. And Robotaxi is something like currently people like the service and they are trying it, but I'm very, very confident after 5 years, nobody just think people treat it as an infrastructure. Do you think any infrastructure will be not profitable? It's can't imagine. It's not imaginable. So, as long as we can keep on going and keep the safety record, the profitability is a sure thing. It's a natural outcome.
We did speak with Pony.ai about this as well. They're saying that definitely by the end of the decade they can be profitable. Maybe even 2028, 2029. What's your timeline?
I think the timeline is all the first tier robotaxi companies, they have similar timeline. So I'm more, I will use more of my time and my energy to think about what's after profitability. So our vision is like using autonomous driving to make everybody travel safer, more comfortable, more efficient. That's our vision. We have a grand vision. Profitability is a milestone, it's a natural outcome, but that is not the single objective we are pursuing. We are pursuing to push forward for the technology, to push forward to make everybody feel happy.
In terms of that global expansion push, you're in Europe, Middle East, Southeast Asia is another key market for robotaxi companies in general. Where do you see the biggest chance then of at least margins? I mean, I think must be between the Middle East and Europe, I'd say.
Exactly. I want to stay with some numbers. You know, Middle East is definitely our one of major market. Think about our report in second quarter. In the second quarter of 2025, we have more than 60% of revenue growth, with a profit of 40%. And more specifically, our robotaxi income grows 8 times compared to last year. This all because of our great global strategy in Middle East and also in Europe. Therefore, I always mention, with this kind of growth, profitability is a natural outcome. You know, I don't care too much about the timing of natural outcome. I care about how can WeRide become a real leader. We are first mover. Currently, we are still industry leader, but can we become a very, very dominant industry leader in this area? That's the thing we are working hard, we strive to.
Actually, on that point, because we have heard, in the Pony.ai roadshow materials that you were concerned that there were some inaccurate statements that were made about WeRide in that. What would be your response?
I think, the numbers are not correct. That's a fact. But for us, we think great company is great company, no matter how competitor describe you. And WeRide, with our numbers, see our prospectors and see our real numbers, and we are so confident. I'm happy with the progress of our company.
Are you making or taking any sort of follow-up actions then?
So currently, we are trying to mainly working on the Hong Kong exchange and expanding our global.
I mean, in terms of the roadshow materials.
The roadshow materials is something we are working on. I'm going to look at the details and everything. But one thing I want to emphasize that is, we are building ecosystems. We are seeking for partners. And also for the future, I want all competitions to be friendly. Okay, I believe the best technology company will win, not the company that's trying to show the wrong numbers.
Well, Tony, thanks so much for taking the time to speak with us, and congratulations again on the listing. Yvonne, I do need to point out as well that we did have the interview with the Pony.ai CEO, James Peng. He put that down to a misunderstanding, and likewise as well said that WeRide is a great company, but that was the response there.
Okay, thank you.
Yeah, coincidence. then maybe. But yeah.
We can all get along.
You know,
the world
why
is big
not?
enough.
Yeah.
Not James Bond here.
So much room for gongs there on that stage, right? So,
not a lot for gains today, though.
Yeah. Thanks for Tony Han, of course, founder and CEO of WeRide. There, speaking with Bell just earlier on. If you're a subscriber, you want to watch all the interviews that we had this morning, you can also check out our interactive TV function, TV Go. You can become part of the conversation. Also send us instant messages or questions as well for our guests throughout the show. Check it out at TV Go.
Right, welcome back. All right, there's so much. Oh, okay. What's this? Oh, Japan. Okay. Toyota is an earnings story, although the market did get quite a small window to react to it. Enough, of course, yesterday, some guidance, and of course, what it means as far as the currency is concerned. Nissan, the scoop was out on the headquarters earlier today that they're looking to sell the one in Yokohama. Sanrio is a tariff story. When you look at what the company said, I mean, this is the biggest decline, by the way, in the MSCI Asia Pacific. And Rinnai Power is, to be honest, I don't know what the story is there. Do you know what it is? No, anyway.
I know about Hello Kitty, though. I'm taking a look at Sanrio, right? They were talking about they had to cut their U.S. sales forecast, really just because of the impact of tariffs. So that really led to a $3 billion yen when it comes to those sales targets now for the full year for the U.S. So we'll see, right? They plan to increase labor and marketing costs as well, which also is seen as a negative. That's why maybe we're seeing that stock sell off quite a bit here today as well. Weichai, you're watching that one.
Yeah, so Rinnai, I now understand. It's an earnings story. Apologies for that. And Weichai Power, this one we're still trying to figure out, but both A and H shares are the biggest advancers in Asia today. Plenty more ahead.
Welcome back to the China Show. Here's a look at the HSI a half hour into the session, and we are still seeing gains of about 0.8%. So the overall market is doing quite well. We're seeing this recovery underway when it comes to risk assets here today. On the back, what we saw in the U.S. tech once again in favor. But when you talk about some of these big listings as well, not a good day to list in Hong Kong.
It hasn't been a good week. In fact, I think yesterday even Series didn't do well out of the gates. This one actually is quite pronounced because these are relatively big household names when you look at the tech and EV space, not that serious.
Pony.ai, WeRide, yeah.
Right? The biotech one is, you know what? So the biotech firms really underscore that has really been consistent from the listings we've seen in the price action this year for that sector. So that one was actually up 200% among the 7. So you have 4, I believe, in Hong Kong, 2 or 3 in mainland China. Suffice to say, the activity seems to be doing very, very well. In fact, let me just point your attention to our Bloomberg Intelligence. Sharni Wong had this fantastic piece out today. A few more listings, and we get to $40 billion raised in Hong Kong this year.
They're already 28 billion, I think, as of October. So not much more, really. And we've already seen, I think, 8 already listings that are above raising $1 billion
each.
Including what we've been seeing this week with Series and the like. So certainly there's a lot of big deals that are still, we're not done quite yet as we wrap up, of course, the calendar for 2025 for HKX. Their earnings just came out as well. Pretty good numbers there, thanks to, of course, these big listings we've seen so far. But really, the big discussion this week has been not just on tech, but really what's been going on with the Fed, right? I mean, when you take a look at that ISM services number that came out overnight, I mean, mind you, we are really honed in on the private data right now, but really markets seem to be really kind of focusing on these numbers. So that's all they have amidst this U.S. government shutdown. The fact that they were 3-year highs, just goes to show that, data still remains quite strong in the U.S. I think the ADP was also another issue here. But yeah, you're starting to see the dollar come through, a bit more strength, and Fed expectations on when the next cut should be, I should say, that's diminishing also. Yeah,
Jay Powell really started off that move to reprice the December meeting. From 100, we fell to about 75% following the data overnight, ADP, and I think even prices paid 3-year highs. We're now, a little bit more. We're effectively at a coin toss. This is, of course, worth pointing out. This is a this is an ever-moving target, but the direction of travel recently has really been to the downside. We were also talking to Citi earlier this time in the last hour, and they actually, when you look at the direction of data in the last week or so, it's really been one that suggests that the global economy has held up not just better, but a lot better than expectations going into this year, right? So you have us going into next year, and they think Citi, Johanna, Chua said, the RBA is done hiking, cutting, they're done. Korea, while they signaled they're open to a cut the next 3 months, they think the BOK is done at least for a year. And then when you look at China, for example, they do think there is some upside risk there to growth, given how exports have really come through in a very big way. Plus, of course, tariffs are about to come down. So we're in a good place as far as the economic numbers are concerned.
Yeah, that seems to be the case. I think the key question really for the markets is this whole unwind of this AI trade. I mean, it seems like it just took one day, and we're already seeing dip buyers.
Well, you had AMD and is it Qualcomm that came out?
Came out with some pretty rosy forecasts, right? And of course, we still have NVIDIA in just about 2 weeks' time. So where are we now? Let's bring in Christina Woon, portfolio manager at Eastspring Investments. She joins us from Singapore. I know the key thing you're watching is for this whole AI trade and how this unwinds. It all took one day, and we already saw people coming in and scooping up some bargains. Where to next now, you think, Christina?
Yeah, I definitely think this is something that, we've got to keep a close eye on. I mean, the key reason for that is, we've seen this AI trade run really hard and fast in a short span of time, and we've seen we've seen a bit of a technical correction over the past couple of days. But underlying that, I guess, where the market clearly is in agreement is that this AI trade is a structural one. So we've seen a bit of buying on dips today as well this morning. I do think that even with all of this, it's something to bear in mind, just because given how investors typically are, expectations do tend to run ahead of fundamentals at some point. So even while we're enjoying the ride, we do have to keep questioning ourselves, when does the party stop? Am I going to be the last person in the room? And these are the questions that are important to make sure that you keep pace on both sides of that trade.
Okay, well, Christina, where are you on that spectrum then? Are you more on the, we're probably not going to be the last one standing here at the end of the party, or do you see more room for rational compression in valuations right now without, of course, us going over a cliff?
Sure. I do think sort of, as I mentioned before, the past couple of days have been more of a technical correction. If you look at how things have held up fundamentally, the picture is still looking quite strong. So I think that does lead to a reasonable case for today's buying on dips. If you look at the longer-term structural story as well, and the capex numbers that have come through from the hyperscalers in recent times, these numbers are much larger than we've seen even year on year. So I do think, again, structurally, that does give a good case fundamentally for this theme to continue. But it all does come back to expectations. If it runs too hard, too fast at the start, then that's when you start seeing some of these cracks form. But that could either be buying on dips, or you just have to be very careful on whether that's the start of an unwind, or if it is an opportunity to buy.
Well, then candidates, if I like how you put it, right? So it's a buy and dip scenario more than a rotation is what I understand that you're alluding to. Because what I want to get to is, are there alternatives, though, to this one? Because you look at market cap, you look at momentum. I can't seem to look at any other factors or sectors that can take up that market leadership over the shorter term. I wonder what else we could be looking at here, if at all, Christina.
I think you raise, an absolutely brilliant point, because that's really the way the market has shaped up into the year end because of how strong this AI trade has been. And if we look at how the benchmark is constructed, IT or the tech sector is a substantial part. It's a quarter of the benchmark. So, and I would argue a big part of that is highly correlated as well. I think if we want to be discerning and managing of our risk in the current times, we do have to look elsewhere for other opportunities. India is of interest at this point. I do think it's quite uncorrelated to the AI trade as well. It does have a strong domestic economy that fires on different cylinders as well. So for diversification purposes, that's a market that's of interest to me at this point. It's also been a relative laggard this year. I mean, it's up high single digits still, but compared to what we've seen in Korea, Taiwan, and China, it's still lagged a little. And to me, that's an opportunity because if you look at the recent earnings season as well, numbers have come in at either in line or a slight beat. And it doesn't sound great, but it doesn't sound like a huge beat. But if you take that in the context of the fact that India's been in an earnings downgrade cycle year to date, then earnings that come in line or a slight beat at this point actually could point to a bit of a trough. And the festive season demand has held up. If that continues to do well as well, it's a good setup into next year.
Yeah, I mean, up until now, it's been really a China versus India, over India sort of story. I want to take a look at some of those MSCI additions that we saw in this November review. And it seems like it's for the first time, I think since February 2024, we've actually seen more net additions into some of these indices at a time when global portfolios were really cutting their risk and being underweight China. What does this tell you about this market? Is this another catalyst for people to really re-rate China once again? And are long-only global investors now really warming up to the idea that China is back?
No, I would definitely hope so, because, I mean, if we just took a look at how China's performed this year, I mean, year to date, it's been quite a strong performer as well. But if we look at that relative to history, it's not even hitting all-time highs. Whereas if you look at some of the other markets in Asia or globally, actually, they've all been hitting all-time highs this year. So you could argue that where valuations are right now and where interest has been coming in from an indices perspective as well, there actually could be a bit more to go from a flows or positioning perspective. That could be interesting as well. And if you look at China, even past all the geopolitical headlines, there are certain sectors within the market that continue to be quite interesting. I personally like the industrial sector where, you can play in China's national champions in batteries or heavy-duty truck cycles as well. It's quite an interesting space where you can also find idiosyncratic risk.
Christina, thank you. Christina Woon there, portfolio manager at Eastspring Investments, joining us out of Singapore there. And of course, coming up next, we'll be hearing from Lululemon's China Managing Director. She's going to be joining Steve there in Shanghai. This is Bloomberg.
Welcome back. You're watching the China Show. So I think the big news this week in corporate China, right? You remember Starbucks and the issues they're having there with their foreign units. In fact, when you look at the opposite of some of the success stories, Lululemon, when you look at their specific China unit and the amount of growth they've seen throughout the years expected into the next few years. So from about early 2022, $400 million into the expected close to $2 billion of the China business. That's about a 5x growth just over 5 years, right? Let's see, of course, if analysts are proven to be correct. Now, as a percentage of the company's global revenues, where the U.S. is still the biggest market, and then you have China, and then you have Europe and everything else, you can see China's gone from about mid-single digits in 2022 and expected to go into the mid-teens in about 2 years from now. So that growth as a percentage of the pie and an absolute basis is really working out when you look at what Lululemon's doing here in mainland China specifically.
Yeah, Yvonne. It's quite remarkable, right? At a time when the consumption has been soft, that they've really been able to stand out as a foreign brand in the mainland as well. Not many have been able to do that. As for the stock, though, what are the preferences from investors? Well, you take a look at something like Lululemon and Amer, for example, and it's like almost a tale of two sportswear companies, right? Because some of these sort of global premium performance, it seems like the likes of Amer, the technical sportswear makers, are still outperforming the likes of Lululemon. It's going to be a key question, right? Can Lululemon replicate what they're doing in the China, and maybe replicate that in the West? Because clearly we're seeing sales in the other parts are not as robust. So certainly that's going to be one thing. Let's get to the China International Import Expo. That continues today in Shanghai. And of course, our Chief North Asia correspondent, Stephen Ingle, he's at the event. And we're talking leggings. We're talking Lululemon today, Steve.
Yeah, that's right. And I'm getting a bit of a hard sell to switch over from Hugo Boss to Lululemon athleisure wear for on air. but I digress. Let's bring in the guest, China MD for Lululemon, Sanyan Ng. Thanks so much for having us here.
Thanks for having me.
So we just went through a bunch of numbers, how we're seeing how the China market, obviously last year and into this year, took the advantage of the big boom in athleisure wear and sporting wear and outdoor activities. We have seen that market tail off a bit. How are you being impacted by that?
We have only been in Lululemon China for only 12 years. So we feel like this is only the beginning of our journey. And we have been not growing in China, but growing together with China in order to expand this Healthy China 2030 movement that the government is pushing. So we do see our positioning as a well-being advocacy with our products, with our community to drive movement, to find joy in movement and not necessarily a certain sports and activities.
But how are you seeing the drive to boost consumption? Is that starting to pay off, obviously? People are a little bit hesitant to spend a lot right now. Households are holding on. But $150 leggings, yoga pants, $600 jackets. Are you finding a sweet spot that still commands? Because there's also the lower cost or lower price dupes, the alternatives.
So I feel like Chinese guests are very sophisticated. Our product, we believe in the science of feel. We have a lot of technology and innovation in our material that once you put on our product, you know the sensation is different. The durability and versatility of Lululemon product makes it a good investment. A lot of Chinese guests that wants to buy. Obviously, there's competition, there's option, but it actually gives us a sweet spot where I think is value for money that the Chinese guests love.
What kind of pricing power do you have right now? Because China, you've been kind of a margin king compared to in the United States. So actually, you've had better pricing power here than in your biggest market in the United States.
So definitely, I think in terms of pricing, it's an acceptable level. I think the guest enjoys it. On top of it is the community that we bring together, the awareness of well-being that we're trying to advocate is something that resonates really, really strongly with our Chinese guests.
What would you like to see from authorities as far as kind of unlocking the consumer? Li Qiang was here at the CIIE, the premier, yesterday, and he was saying we need to unlock the consumer. Consumption, given the trade war, consumption is going to be key and boosting that contribution to GDP.
Definitely. I think we see ourselves as a player together with the Chinese government about bringing well-being and wellness to China. So as the government support us in building more stadium, promoting activity, we also play a part in bringing community together, making them accessible to workouts, to yoga classes. They're free. All our stores, our 165 stores across the country are actually our community hub that provide access to classes for free.
So 165 stores now?
45 cities.
So what is the projection over the next couple of years? You see room to grow even further, and where and how many stores are we talking?
Yeah, we still see runway and opportunity, not only in our 165 store, we also have a strong online business that enables us to actually know where our guests actually live. In that sense, we still see a runway of growth in tier 2, tier 3 cities.
Okay. Singles Day is coming up. You usually get a boost, right, on November 11th?
Yeah, it started.
It's already started, the pre-Singles Day, right? Yeah. So are you going to be able to keep that kind of momentum through the rest of this year and into 2026, given the overall slowdown in this segment?
Definitely. I think our Singles Day's performance so far has been very, very strong. In the sense that
very strong?
We definitely see very good growth. But I know Singles Day had another few more weeks to go. But so far, the result has been very, very encouraging. At the same time, it's like, how do you differentiate in terms of platform? How do you actually balance your omni services, and how do store and online not cannibalize one another? It's things that we're working on through services, to product differentiation. So it's been very, very positive for us.
Now, some of those numbers that Yvonne and David brought up, we were looking at those charts. Last year, we were seeing China contributed about 10% of global revenue. Projections, 2027, about 16.8. Is that in line with your internal numbers? 17% of global market. So how important then, when you go back to the North American market and see weakness in the United States, or at least slowing pace of growth, how important then would China be to the overall global ambitions of this company?
China is Lululemon's second largest market. So our growth and our focus on the growth of how we build the internal collective as well as local talent enable us to actually understand this market, feedback to global, and grow in China.
What has the overall trade chaos in the world done to your strategy and how you're thinking about growing this market and the bifurcation of supply chains as well as shopping trends?
So I'm only responsible for China in that sense. I don't see immediate chaos for us.
How has it affected your procurement? I think China is one of the biggest sources of fabrics for you. How has that changed, and has it changed now that we've had a bit of a truce and a relaxation in some sectors for tariffs?
So as today, I don't see any impact to the China business per se.
No impact at all?
Not with China, my business in China.
On procurement? Do you see yourself maybe buying more from China?
We have a shared resources in terms of procurement and allocation. As of today, I think we are strong in where we are today.
Yeah, okay. Going forward, though, where would you take this model next? The China market has been very successful. I know you only look at this market, but is this a market that is, you can replicate elsewhere in Asia as a model that you can take back to Vancouver and say, this is working?
We definitely share a lot of all our successes with the rest of the region to see that it's actually resonate with them in a sense, like in terms of our store design, how we actually do an event, like our Chinese New Year campaign. So I don't see it as China for China only, but at the same time, I always look at it as not a China strategy, it's a Chinese strategy. At the end of the day, they're Chinese around the world, and how do we share this and how do we syndicate what we have done well to the rest of the world?
So earlier we talked about that boom time through last year in athleisure and experience spending, right? So how do you see the segments changing? What are Chinese buying now? How has that changed? What your product mix?
So definitely there's a lot of competition at play, but I feel like competition doesn't have to be a threat. It's actually a catalyst for innovation and excellence. I think for our product, we call it high performance, high style. It's technical material, but it's versatility that enables you to wear to the office, to wear for casual, to wear for a sweat. So in that sense, I think our success in material innovation has actually helped us to scale into other occasions that the guests could wear.
What does 2026 look like then for you as compared to this year?
2026. But as it is, we're still very positive about outlook for China.
Yeah, and the dupes. I have to talk about them because they've hit all the other major competitors of you as well, getting lower price alternatives to the premium brands such as yourself. How does your strategy change to counter that when a lot of those dupes are showing up online at Singles Day and beyond?
There's definitely dupes for everywhere and anywhere. But if you were to try a Lululemon leggings, you will know the difference. Our material technology is based on science of feel. They may look the same, but when you put it on, you absolutely could tell the difference between a dupe and a Lululemon legging. So in that sense, I think at the end of the day, the guests will realize that it's actually what they pay for in terms of quality and performance.
All right, well, it's going to take a lot of convincing to get me into leggings, but thanks so much, Sun Yang, and thanks so much for joining us here on Bloomberg Television. Okay, guys, going to send it back to you from the China International Import Expo, or CIIE, where we're here at the Lululemon booth.
Steve, as a matter of fact, I think you would look stunning and fantastic and pastel.
We were just saying, the 11/11s, we were just looking at the sales. I think I found some leggings for Steve.
So what is it called? Skinny and utility. There we go. Leave me out of it.
Yeah, but there's a whole conversation in our newsroom. Are you a Lululemon loyal fan and customer, or are you kind of leaning to some of the dupes as well? I think it's pretty mixed so far.
It's so expensive, but I mean, there's a market for it certainly.
Yeah. There's a whole market up for dupes though on Taobao. I definitely have seen that as well. But yes, as you said, once you try one on, it's hard to go back.
Okay, well, I know what I'm doing right after the show is today. I'm slipping into those leggings and maybe never coming back. All right, there we go. Lots more ahead here.
No one can see what you're wearing under the desk.
No. Yeah. Oh, maybe. Already. Amcham Shanghai is joining us with Steve there, of course, in business sentiment. Following last week's trade truce between two countries. Plenty more ahead. This is the China Show. Right, welcome back. Some movers to tell you about UOB, and of course, earnings season still quite a substantial amount, though. And as you can see, the market's reacting to that. This provision in lieu, there we go. That's the big word for the day. Not really. Of these property risks tied to those. Three-quarter profit beat, though, on DBS. Yes, go ahead.
Yeah, DBS, I mean, those shares are actually at a record right now. We're up some 3%. So, another tale of two Singaporean banks after that third-quarter profit beat. So, that was really driven by the strong performance in its wealth business that really did help them this time around. So, there you go. That's a Singaporean bank situation. Let's take a look at some of these China chip stocks, because you take a look at SMIC, some of the Hua Hong semis, they are some of the standouts in this HS Tech rally that continues on here today. Haigon Information, for example, that's up some 7% right now. And a very different story to some of the listings that we're seeing in Robotaxis and the like here today in Hong Kong.
Yeah, the OG seem to be doing well. The new ones to the block don't seem to be. Xpeng is the biggest decliner along the benchmark here. It's also worth pointing out, speaking of earnings and chips, Hua Hong Semi is actually on deck, I believe, today to report earnings. So, yep, that's also an MSCI story, which we'll talk about on the other side of this break. A glance at this rally now here in Greater China. This is the China Show.
All right, it's 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment. And yeah, it looks like things are looking pretty good in Tokyo here today. Nikkei 225 and Topics are punching 1% higher here. So we're back above that 50,000 level for the Nikkei here. Strength coming back a little bit when it comes to dollar yen, for the yen, I should say. But we're still hovering around that 153, 154 mark, Dave.
Yeah, from 154 to 153.86. I'm sure our Sherry-on feels a lot wealthier today with that big move. Headed into the lunch break. Here's a lunch suggestion for you. Have a bit of instant noodles, wash that down with some Yakult, and then top that all off with some chocolate. The reason we have that up, these are the 3 deletions from the MSCI on the Japan side of things.
There's all food related.
All food related, yeah. Probiotics for the win. The story in China is different, though. These are the additions coming through. Partial list on your screens in terms of market reaction. 27 in, 20 out, net 7. Some of the names are coming through, like these ones here on your screen. Deletions are also coming through in a couple of minutes, if not moments. Let's show that, please. And yeah, okay. Why don't we get more on the story?
Yeah, the fact that we're seeing actually net additions, right? I think it's the first time in maybe more than a year and a half that we've seen that. Certainly does show maybe sentiment. A narrative is changing around Chinese stocks. Let's bring in Catherine Nye. She, of course, tracks all markets for us here in Hong Kong. She leads our Asia stocks coverage. Yeah, what do these sort of additions, deletions tell you?
I mean, I think this is a long time coming. Right? This market has been so strong. We've seen it through, I mean, starting from the beginning of the year with DeepSeek and the AI changes, right? We see it with the way that China has really owned sort of the EV space, with the robotic space. I mean, I think the companies here are really representative of just the growth story that we've seen, right? From UB Tech to the gold players. I mean, this is really the semiconductor, the chip companies. I mean, this is really kind of a follow to just how strong this market has been, and this makes a lot of sense. Right? I mean, index compilers are trying to find winners here, and then I think this is a clear, obvious one.
Yeah, the backdrop is, I think, to the point you just made. The world is coming from a reality where a lot of people were massively underweight China, and now with these index compilers catching up, you would think that there would be flows coming through as well. To close some of that underweight. Are we expecting more flows to come into this Chinese market generally?
I mean, I think so. I mean, beyond the passive side, I think we've already seen that with the sort of active fund managers, people talking about being overweight China, coming back to the market after so many years, right? I had a conversation with a friend earlier this week who was saying, this year has been so remarkable. Someone who trades in the market, and it was, that the last couple of years have been just awful, and that this is just the year has just really kind of blown us out of the water, and so. So, yeah, I mean, I think we've seen it on the active side. The passive side following through just makes total sense.
And I think we're almost done with earnings season in China, but we still have some of the big tech plays as well. Are expectations a bit too high now, or realistic? Like, What's your team looking at there?
Yeah. I mean, yes, with Alibaba and JD and Tencent. I mean, those are the big ones, right? I mean, they're the
next few days.
They are remarkable. The stock moves this year have been remarkable, right? They've come off, a tad bit as people take a bit of a breather, but I think we are still expecting some pretty strong numbers coming up in the next week, 2 weeks or so.
That's right.
The market is pricing them at near perfection. I think that's the hot word. I think the market is continuing to price these things at near perfection, but there's just a lot of anticipation to see how their hopes, and there's all this talk about AI is going to be monetized, and so I think that's really going to be the hot topic as we go into earnings.
Yeah, hopefully they guide towards that and really an understanding of how they monetize a lot of the, I wouldn't say hype, but a lot of the big announcements that they've made already. Catherine, fantastic. Thank you so much. Catherine Neither, of course, who leads our Asia Stocks coverage. Okay, in fact, just about 30 minutes ago, we heard from one of our guests, Christina Woon, out of Eastspring, talked about what the broader implications and the message really it's sending by really having a lot more China presence in MSCI. Have a listen to her comments just now.
If we just took a look at how China's performed this year, I mean, year to date, it's been quite a strong performer as well. But if we look at that relative to history, it's not even hitting all-time highs. Whereas if you look at some of the other markets in Asia or globally, actually, they've all been hitting all-time highs this year. So you could argue that where valuations are right now and where interest has been coming in from an indices perspective as well, there actually could be a bit more to go from a flows or positioning perspective.
Yep, so plenty to choose from, according to Christina, when it comes to China. But yes, today, when it comes to robo-taxis, for example, may not be your day. If you take a look at what Pony.ai and WeRide are doing here, was this just a timing issue? Why these two rivals decided to list on the same day as they battle for, of course, investors and investors' eyeballs, really, right? And money, right? You're down 14% for Pony.ai. WeRide's down double digits as well.
Yeah, in fact, we spoke to WeRide founder and CEO Tony Han at the stock exchange earlier. He talked about the company's international operations, particularly what they plan around as far as the Middle East market is concerned. Have a look.
Middle East is definitely our one of major market. Think about our report in second quarter. In the second quarter of 2025, we have more than 60% of revenue growth, with a profit of 40%. And more specifically, our Robotaxi income grows 8 times compared to last year. This all because of our great global strategy in Middle East and also in Europe. Therefore, I always mention, with this kind of growth, profitability is a natural outcome. I don't care too much about the timing of natural outcome. I care about how can WeRide become a real leader. We are first mover. Currently, we are still industry leader, but can we become a very, very dominant industry leader in this area? That's the thing we are working hard, we strive to.
Yeah, one of the two listings in the sector. The other one, of course, is Pony.ai. James Pong is the CEO there. And our Min Lo, of course, our China correspondent, did speak with them yesterday ahead of this IPO today.
Yeah, it's an interesting visual this morning where you have James Peng and Tony Han standing on the same stage, and both of them, by the way, are alumni of Baidu. And we know that Apollo Go is by far the market leader in China right now, so it's an old boys club there. But
homecoming of sorts.
Yeah, and I'm not sure if it's a coincidence, whether there was a rush to list ahead of each other or at least on the same day, but not a good day for both of them. And I spoke to James Peng, the CEO, yesterday, and it is an intense competition because just ahead of this, WeRide accused Pony.ai of misrepresenting the company in the Investors Roadshow. Their promotional materials were claiming that WeRide had made 0 rides so far. I asked James Peng about that, and he chalked it down to a misunderstanding. But have a listen to what he said about the company's overseas expansion plan.
We actually have relatively big footprint in our global markets. I think we're now in 7 markets: South Korea, Singapore, Luxembourg in Europe, 3 countries in the Middle East. Regulation is a key part of our business, and we want to be a strong supporter and a strong negotiator for government actually to pass the regulations. So certainly we're not in a waiting mode for the regulation. That's one point I want to make. But among all the markets at this point, seems to be the Middle East, especially UAE, seems to be probably in terms of regulation to be the fastest to approve fully driverless commercial licenses. But I think other countries definitely will follow suit. And we already have a footprint in those markets. We have good partners in those markets. And once the regulation is ready, we'll double down and push our more fleets into those markets.
You've actually been operating in the US much longer than in the UAE. What are some of the biggest roadblocks you are facing in terms of commercialization in the US?
I think that it's some geopolitical concerns. Also, there's data transfer, data storage, and some other concerns. So we deprioritized our commercialization in the US, but rather focusing on other markets.
So are you giving up plans to commercialize there now?
At least for now. Or we should say, at least we paused.
So from what he's saying, it does seem like the pace of their expansion is really being decided by the pace of regulatory approvals everywhere now. So perhaps not a coincidence that both companies are looking at the Middle East as a place to expand, because that's where the regulatory environment is a little bit more friendly. But I think right now investors' concern are still about the profitability of these two companies, right? Because Pony.ai has been operating, I think, for about 9 years now with negative net income. But James Peng did say that they are at an inflection point because for the first time now they have managed to achieve gross profit per vehicle, which means that there's a clear path to profitability. What they need is to scale up to achieve a level of economy of scale that they can achieve company-wide net income. He says that that's going to be maybe 3-4 years away, perhaps 2029 could be a time when they can reach that 50,000 vehicle fleet level. They're now aiming for 1,000 vehicles in China in the near term. But also it's an interesting day because yesterday there was Xpeng's AI day, and we're seeing a very, very crowded space here, right? Yeah. Because these two companies, they're specialists in the autonomous systems, providing the hardware and software, and they integrate it with other OEM manufacturers. But then you're also competing with the car manufacturers like Xpeng, which is rolling out 3 new models of Robotaxis next year. And then you're competing with the ride-hailing platforms like Didi, which is also fundraising to produce their own Robotaxis. And then you're competing with the tech firms like Baidu as well, Alibaba. So very, very crowded space here.
Yeah, we were just talking to Brian Gu about Xpeng, really, and they're looking at international expansion as well. But certainly, yeah, the fact that it's all in-house is certainly something that is maybe a standout for them for now. Minlo, thank you for bringing us that interview, of course, with the likes of Pony.ai. Let's get to some breaking news right now on SoftBank. So this is according to our sources, but it looks like the company is said to have weighed a takeover of the U.S. chipmaker Marvell Technology. The timing of it might be earlier this year. Now, this is when, of course, we've been seeing Masayoshi Son. He's been studying Marvell as a possible target on and off for years now. So this is part of his efforts to really bet big on hardware that can benefit from this whole AI boom. What else are you seeing, Dave?
Yeah, I mean, this is really a stock that was among, I think, still is in conversations around what the next NVIDIA is. I think this one, you had Palantir, which is obviously not apples to apples, but it goes to show if SoftBank looked at this, and this is purely just thinking in my head, others actually looking at this as well. Just to note, watch the stock going into the U.S. Open today. We were up 6% on Marvell, and we'll see, of course, whether or not this plays out as far as the stock price is concerned. But yes, you can check out the details of that Bloomberg scoop on your terminal right now. SoftBank has done this. Marvell, do we have that on the screens coming up as well? That has done tremendously well. We did see a dip, and then we're coming back a little bit towards the upside in the last few weeks and months or so.
Yeah, what's interesting is, right, part of that whole portfolio for SoftBank is also ARM Holdings, right? So where does that fit in? It seems like, according to our sources, that SoftBank was actually eyeing Marvell with the idea of combining it with ARM Holdings. So while Marvell and SoftBank, they're not currently in active negotiations on a deal, it's possible that interest could be revived, according to the people that we've been talking to as well. So it seems like Sun regularly looks at dozens of possible deals without taking action. That's according to what those people that we've been talking about have said. So there you go. Very interesting story. We'll bring you the latest once we do know more. But yeah, plenty more ahead. This is Bloomberg. Perhaps why we are seeing risk assets in this rebound kind of be more pronounced here this morning is what we're seeing in the U.S. Supreme Court. Now, they're signaling skepticism of President Trump's global tariffs, with key justices suggesting he had overstepped his authority.
The vehicle is imposition of taxes on Americans, and that has always been the core power of Congress. So to have the president's foreign affairs power trump that basic power for Congress seems to me to kind of at least neutralize between the two powers, the executive power and the legislative power.
Let's bring in our news desk editor, Balazs Pence, here on really the significance of what we're hearing from the Supreme Court so far.
Yeah, so this is a case that the whole world is paying attention to right now. It affects not just what happens in the U.S., but what happens to global trade. And this case right now hinges on what the conservative majority in the Supreme Court thinks about whether the president had the power under emergency powers to impose these tariffs. And what we heard the Chief Justice talk about is this idea that the power of taxation lies with Congress. And so the question is whether the president took that power unilaterally and imposed a form of tax when he introduced these tariffs. And it does sound like at least 3 members of that conservative group within the Supreme Court are quite skeptical of the government's arguments. It does sound like the Trump administration still has an uphill battle to fight if they want the court to see things their way.
Okay, so what are the president's options now?
Well, there's still some ways to go before there's a ruling. We do think there might be one before the end of the year.
Okay.
If the tariffs are struck down, there are some other ways the president can still reinstate those tariffs. There are other acts that he can use to impose them. But as Justice Coney Barrett said, if this gets struck down, it will trigger another fight about potential rebates, paying back those almost $90 billion of tariffs already collected. So she mentioned that would sound like a quite messy situation.
Balazs, fantastic. Thank you. Balazs Pence, our news desk. Editor here. Yeah, we have a reaction already, in fact, just an initial take here from Chris Kennedy, of course, who leads our economic statescraft. There we go at Bloomberg Economics. And effectively, well, the take was that, yeah, I mean, we've told you the Supreme Court was skeptical of the legal justification for most, not all of the tariffs in the hearing. They do expect a broad ruling against the White House that largely invalidates AIPA as a basis. And it would potentially mean that the government then has to refund the levies in that sum, and that could go to about $140 billion. We talked about how much the U.S. government has already collected as far as this is concerned, so they might have to give it back, but if they are forced to do that, but of course, Balazs just said there that they do have some options too, in the event that they find themselves in the situation.
Yeah, and AIPA is one thing, right? But Johanna Chua mentioned from Citi, there's still Section 232, which is still something that's a separate issue that we still really don't know in terms of what Trump can do when it comes to that. So certainly there's still a lot of uncertainty, as Balazs mentioned. There's still a lot of time before we hear some sort of ruling. But yes, that is the reaction that we're getting. But from the market's perspective, that says at least there is that skepticism that maybe that there is a chance that this could actually help sentiment, right, when it comes to markets, and really that this de-escalation of trade tensions between the U.S. and China can maybe stay a little bit longer, has a bit more durability on that front as well. Speaking of really U.S.-China, we got to talk about what we heard from NVIDIA. CEO Jensen Huang had told the Financial Times that China is going to win the AI race. He says that's based on lower energy costs and fewer regulations. Huang also accused the U.S. and U.K. of cynicism over AI, calling instead for more optimism. His remarks come after President Trump maintained a ban on NVIDIA selling its most advanced chips to Chinese customers. The French government says it will suspend Chinese e-commerce platform Shein after complaints about the sale of weapons and childlike sex dolls. Now, the suspension will affect Shein's online marketplace and not its first physical store in Paris, which opened just hours earlier. Shein says it hopes for discussions soon with French authorities. And Netflix may be missing a golden opportunity to cash in on its surprise mega hit K-pop Demon Hunters. You see what I did there? Fans won't be able to get their hands on merchandise, including action figures, dolls, and plushies, until after the holidays. The delay is due to the time required to make and ship the products, leaving producers and retailers unprepared. And for my 5-year-old, very disappointed. All he keeps asking is, "Mommy, where is not the merch, but where's the toys?" He's been waiting for it for months now, I think. But yeah.
We did see a lot of costumes, though, but he's really after the actual tangible things to play with.
He wants a shirt. He wants something that shows the Saja boys and those demons. But yeah. But what from the story from Lucas Shaw was that I don't think they were anticipating this sort of demand and that for this movie to take off so quickly that they didn't even think about making it before Christmas, possibly.
Because you got to get those orders in August and September. We talk about this, right? The runway to Christmas and when you need to get that in. And, well, there's always Valentine's Day. And Lunar New Year as excuses for you
to... for you, love, yes.
Yes, okay. Right. There's more for everybody. There we go. Or Lululemon, okay. Do they make leggings for children, Lululemon? Or how small does a small size get there?
I don't know how small, but I don't think so. But there are actually some athleisure brands for children as well.
What?
As well, yeah.
What?
It's all about athleisure, man.
Okay.
I could just wear that all day. All right, we got plenty more ahead. This is Bloomberg. Some other corporate news this morning. Cathay Pacific shares jumped in Hong Kong after it announced it will buy back shares owned by Qatar Airways. Now, Cathay will buy Qatar's almost 10% stake for just under $900 million if shareholders approve. Qatar says the sale is part of a strategy to optimize investments, while Cathay says the buyback shows confidence in Hong Kong's aviation hub status. Country Garden says it has won creditor approval for its debt restructuring plan. The vote represents a milestone for the developer after years of negotiations as it seeks to avoid the fate of its peer, Evergrande, which last year was ordered to liquidate. Country Garden will seek court approval for the scheme at a hearing on December 4th. Apple is said to be planning to use an ultra-powerful parameter AI model developed by Google to help overhaul its Siri voice assistant. Sources tell us the two companies are finalizing an agreement that would see Apple pay roughly $1 billion a year for access to Google's technology. Apple is aiming to use a Google model as an interim solution until its own models are powerful enough. And Qualcomm has given a bullish forecast for this quarter, saying sales will be roughly $12 billion as demand for high-end Android chips remains strong. The chipmaker's profit took a hit last quarter from a U.S. tax change, resulting in a net loss of more than $3 billion. The company is working to transform into a more diversified seller of chips for cars, PCs, and data centers.
Right, before we wrap things up, we're better by about 1% in the benchmark. And the benchmark, of course, given the changes out of MSCI, changes in its constituency in a couple of weeks. The announcements are already made. We're already seeing some market reaction across some parts of that. Korea's up again 1%. Not really enough to offset quite some steep losses, of course, we got yesterday. But it does seem it did, as Yvonne is pointing out, did just take a very, very short span of time for people to buy back into this dip. We are on the lunch break in Japan. We are still getting some trade there. 0.9% in the Nikkei, Hang Seng, and we're now, I believe, at session highs in terms of this good. Chinese markets are about 90 minutes into the cash market session, about an hour left in the morning for Hong Kong, 30 minutes before we hit the break in mainland China. 4,000, we're back above that level on the Shanghai Composite. 6,000 will still some ways away. That's about maybe 1 or 2 good days away on the Hang Seng Tech Index. Xpeng is coming off low, still the standout to the downside here. I also want to mention, too, that there's a big listing. I think we have 4 here in Hong Kong doing quite extremes as far as the big names are concerned. It's WeRide, Pony.ai down about double digits, and you have some of the biotech firms doing up triple digits. Right, before we wrap things up, a look at cable coming up, Euro futures, and some of the crosses there in the pound, given that it is, of course, Bank of England Day, and we're looking at a 4% handle from the prior read, expected to keep things unchanged going into this meeting. And I think the point from Johanna Chua from Citi earlier on, things are actually doing better as far as the global economy is concerned. Not a lot of delta still as far as monetary
For
policy.
the BOE, it's going to be about elevated inflation. It's going to be about, of course, Labour government's autumn budget that happens at the bottom of this month. So certainly there's a lot of factors at play here when it comes to Bank of England and whether they can actually cut or even, hold, right? So holding rates is what is expected here today. Of course, that's it for us here in the China Show. Insight with Haslina Amin is next.